I'm Sarah, a tutor at Accountancy Learning, and in this video I'll be taking you through the AAT Financial Accounts Level 3 AAT Sample Paper 1, Task 6. So this task is going to be about preparing accounting records from incomplete information. In the first task here, we are told that annual sales for the year are 102,320. And we're told on average it takes customers 1 month to pay. The question asks us to identify which one of the following is most likely to be the closing balance on the trade receivables account. So because the customers on average take 1 month to pay, we would expect out of a whole year's sales for there to be 1 month of those sales left to pay in the following month in the start of the year. So we can now work out what on average the monthly payment is by dividing our annual sales by 12. So we're going to average it out over the year and see how much per month is paid. So that gives us a figure of 8,527. So this means that that very last month, there's likely to be £8,527 left over to pay in the first month of the following year. So that would be an estimate of our closing balance. Now that figure isn't one of these figures that we are given in the question. So we now need to take note of these words here, most likely. So we now need to choose as our answer the one that is closest to our estimate here, in which case it'll be £8,726. Moving on to the second part of the question, it says referring to your response for part A, first part. So our answer to that was 8,726. We're then told that we've printed an age receivables list off the accounting software, which totals 55,750. We're then asked to identify which of the following actions should be taken next. So this was our estimate that we had from our first part of this question, and this is actually how much the accounting software is saying that the closing balance is on the account. And that's quite a big difference between those two figures. So really, we shouldn't ever just be reporting figures, either the one that's produced by the accounting software or the figure that we've calculated just because it looks more reasonable. We need to understand what the difference is. So we should be checking the accounting software for errors and investigating whether we can find a reason for that unusual balance. It may be that we find errors, it could be typing errors, inputting errors, or it might be that there is actually something there that explains the difference as to why the age receivables list is that much higher. Moving on to part 3 of this question then, we are asked to complete the following statement. If the gross profit is calculated as a percentage of revenue, this is called the, and then we've got the option of margin and markup. So let's remind ourselves of what margin and markup are. So, margin. This is when we make sales 100%. Markup is when cost of sales is 100%. And the way to remember these is that margin, it's all in. So there's the in margin. And then the markup is you're going to be stepping up from cost of sales So that would be your markup. That's a good way of remembering your markup. So going back to the question then, we're saying that the gross profit is calculated as a percentage of revenue. So we're basing it on revenue, which is our sales. So therefore, we are going to be using our margin. Next up then is we are given some information about James and AJ's business, who have a customised cupcakes which they sell to organisations. And the information we have is related to the financial year end 30th of June 20X9, and all sales are subject to VAT at 20%. So the first part of this question is going to ask us, using the information supplied, we need to find the missing purchases returns figure. And to do that, we're going to prepare the payables ledger control account. So this is where we're going to be using our incomplete records knowledge. So first of all, our payables ledger control account is the liability account. So using our dead click, anything that increases the account is going to be a credit, and anything that decreases the account is going to be a debit. So by preparing this account using the information that we're given, we're then going to have a balancing figure, and then that balancing figure is going to be the figure for your purchases returns. So with any account, we always need to start by having a look at any opening balances that we've got. So the information we're given is we've got day books here, we've got our balances opening and closing here, and then we've got various bank transactions here as well. So we can use this figure here, trade payables, and the opening balance at the start of the financial year. So it's going to be our credit, and it's going to be 10,281. So in the exam, you'll be able to click on those little arrows and it will bring up a little list of descriptions for you to choose from. So next, let's have a look if there's anything here that's going to increase our payables ledger control account. Well, from our day book here, we've got our purchases, and then we've got the total amount. So this is what would be posted to the payables ledger control account, because this would go to purchases and this would go to our VAT account. Then the gross amount goes to our payables ledger control. So we can put that in. So it's increasing, so it will be a credit, and the full gross figure was 194,160. So next then, we've already dealt with our day book. Sales don't come into it because we're working on payables ledger control. Trade receivables don't come into it because we're working on payables. So now we need to have a look at our bank summary. So in our bank summary, we have got this trade payables on the credit side. So that means we've paid our suppliers. So that's going to reduce the balance on our payables ledger control account. So we can put that on our debit side. And that was 187,129. And then finally, we can also put in our closing balance, because we're told the closing balance up here. So this is the year end that we're working on, and this is our payables closing balance. So our closing balance is going to be our carried down balance. So you would put your balance carried down on the debit side, because remember, in the next financial period, we move it forward. So it's going to be on the credit side as our bought down balance. So the balance carried down on the debit side of 15,482. Now, what I should point out here is that your totals in the exam will auto sum as you're typing your figures in. So you will end up having a total on the credit side of 204,441. So now we are going to be looking for what is this figure to make it balance. So you are going to have a 204441 is the figure that we're trying to get to. You're going to take off your bank, take off your balance carried down, and then that gives you a remaining figure of 1830, which is going to be your purchases returns. And then in the exam, this would then auto total and it would balance. So now we've got to use the information supplied and your answer to B above and find the closing balance on the VAT control account. So our answer above was 1830. So we'll just make a note of that so we've got it for later on. And now let's make up the VAT control account. So again, in the exam, you'll be able to pick from your drop-down lists. And again, the totals will auto balance as you type in your figures. The question already gives you a balance brought down on the credit side. So now let's go through and fill in the figures and the rest of the account. So we've already got here purchases daybook. So if we go back up to our daybook, we can see that is our figure there. So we can now put that in here. We're also going to have to think about any payments that have been made. So let's have a look at our bank statement here or our bank summary. We've got £22,708 has been paid to HMRC. So that's going to reduce our balance. There. Then what increases our balance is going to be all of our sales. So we need to add in our sales daybook here. And also any cash sales. So let's go back up to our daybooks. So here's the VAT for our daybooks, 48,560. And then let's have a look at our bank. Have we got any cash sales in here? And we have. So at this point, be careful not to just put that figure into the VAT control account because that's your gross figure. So you need to work out what our cash sales VAT will be. So we take our gross figure, we're going to divide it by our 120 or 1.2 if you prefer to work in decimals, and then you multiply that by the 20% or 0.2, and then you get 5,100. Now that's your VAT figure. And then finally, we've just got to deal with our purchase returns. So we did this in the previous question here, and we've got our purchases returns at 1,830. But again, we need to work out what our purchase returns VAT is, because that 1,830 is the gross amount. So again, we'll do the same calculation that we just did before. to work out our VAT, which comes to 305. And then, as I mentioned, these will total automatically in the exam, and your VAT control account will balance.